Getting hit hard. So 6% low on Nykaa. It's now halved this year, more than halved actually. And not just that, other platform companies not too far behind. Zomato is down 4%, delivery is down about 5 odd percent. You have PB Fintech that's been under pressure. So this whole lot has been taking it on the chin. Amit Gupta, who is the Vice President and Fund Manager at ICICI Securities PMS, joins us now to talk about that. Amit, before I ask you about your view on the markets, first of all, happy Diwali to you. Hope you have a great year ahead. What do you do with these platform companies that in any case have been under pressure and now there's this extra selling once the pre-IPO lock-in ends? What do you do here? Do you wait for these rates to stabilize at lower levels and look to buy, or do you stay away from this pack entirely?
So I think if you look at the mid-cap space, there are many opportunities available, where the valuations are better and where there is a better profitability, actually very, very visible profitability at least. But not in this case. I mean, whether you look at the Nykaa case or some other, the recently launched IPOs in the last 1 or 2 years. So they are coming below the IPO price now. So this is where I think whenever the lock-in period is getting over, people are exiting. This is what we have seen in the case of Zomato also, people were exiting. So my sense is look somewhere at least where there is a very clear visibility when the valuations also in the market are lower for the mid caps relatively. So even if you look at the technology space overall, I think the large cap IT has come down to better levels now, but mid cap IT is still costly. It is around 31, 32 times valuations. In fact, some of the ER&D companies in the market which were holding firm like Tata Elxsi and all, we have seen they are also coming off. So my sense is market is aligning the mid-cap piece of technologies now at a lower level. I think there may be some more correction possible there. This is where better be away and look at more large caps in that particular segment now.
Okay. Hi, Amit. So you're sticking with the large caps in IT, mid caps, as you say, they're still relatively expensive. In the banking names, it's reverse, right? The larger cap banks, they're getting a higher multiple, but the mid-sized tier 2 PSU banks, they're at a discount. In your fund, I see that you have the large names, SBI, ICICI Bank, HDFC Bank. You're not going for any of the smaller ones?
So smaller ones, sometimes, yes, definitely you can find an idea. But I tell you the problem going forward. If you look at the loan to deposit ratio in the banks right now, it is somewhere close to 75-80. That means for more credit growth to be, to get money. So you need to have more deposit rates now. So that is where actually they are looking for to raise money or to get more deposits going forward. Borrowing cost, if they borrow at a higher rate, that will shrink your already now. This is the expanded period of NIMs. We understand this. That is why the banks are reverting back. But going forward, when NIMs slowly will start getting contracted because of this, I think the larger banks will again come into focus. Because there is always a possibility, of valuations getting challenged because of the lower margins in smaller banks. Currently, the positive with the banking system is they are sitting at the lower NPAs. So we have already seen at a base of 128 lakh crores, you have 6.5% of NPAs only in the banking system. The credit deposit, if you look at the provisioning coverage ratio, it is also higher, and ROAs, the return on asset I am seeing has improved. So for example, Axis Bank is there being part of our portfolios. We have seen it is almost hitting the much awaited 1.8% of ROAs and 18.5% of ROE. So it is not like the large cap banking is may lose shine going forward. I think they will be much in control, and Axis Bank, this is one of the cheapest private large cap bank. I think it is just reverting now after being laggard for quite some time. So they can always see the money flow coming in going forward.
Right. Take that point. Just keep an eye out on Maruti. It's extending its gains, and how very close to its 52-week high now on Maruti. Just about 10-12 rupees away. 94.40 on the stock. The 52-week high is a little over 94.50, and it's surging. Margins strong. We had pending orders which were extremely strong for Maruti as well. I look at your top holdings, Amit, and I see one auto stock, which is M&M. Wonder why you don't have Maruti there, and after these numbers, would you take a look at this space?
So yes, I would say yes, because see, we took Mahindra previously because out of the total passenger vehicles, we had an idea that SUV is going to expand. In the starting of 2021, it was hardly 20% SUV in the overall PV segment. but now you see it is around 50%. And this is where Maruti became a laggard and M&M took the front seat. So along with this, whether you look at the growth in the three-wheeler segment in Mahindra, or you look at the tractor space, which is now coming up again, and you look at the commercial vehicle space. So these were definitely the positives going with Mahindra along with the EV traction. But when you talk about Maruti now, see, Maruti is being bought by a lot of rural areas, villages. It is more expanded thing actually in the Indian markets. And now one of the positives, what I am observing is that the Rabi crop is going to be very good, because the reservoir levels in India are almost hitting 90%. You look at the last 10-year average of reservoirs in India, it is somewhere around 77, 76%. This time it is hitting 90%. So if that Rabi crop goes good, eventually the more traction is going to come from the rural area also. And that is where I think Maruti, which is also going into hybrid cars, can start getting some traction. So Mahindra remains a top pick, no doubt. It is part of our portfolio and will remain there. But Maruti definitely, I think going forward, looking at the current valuations and looking at some kind of EPS tailwind which can come, I think we can definitely look at this one.
All right. Well, Amit, thanks a lot for joining in and have a good day.